bond getting credit enhancement. Any of your bonds?
First of all, Lata, very good morning, and absolutely no problem. Waiting was a pleasure because I could also get enlightened by the latest development. I think so. We are meeting in a very, I can say, right environment. And if you recall, last time I had told you the bad days are behind us and the worst is over. So I think after a long time I'm coming on your screen. So I think whatever I had told last time, it is now being reaffirmed. And before I come to my operationals, I'll just let me quickly respond to your question in terms of partial credit enhancement. I should say that it is a very welcome move. Of course, the guidelines have appeared very recently, just last Friday, Saturday. So I think we are yet to make a detailed assessment of how and which companies we can do. But as I speak to you, I can see at least one or two companies in our portfolio. Definitely, I think they should be eligible for going in for a partial credit enhancement opportunity. But we will be working out the details in the coming days. But I can definitely say that it is a very significant and a positive step in the right direction.
Okay, Mr. Terdal, good morning and thank you for being with us. You know, recently the company completed that rights issue of 1400 crores, so some money has come in. But how much equity has the management bought from the open market in total? You've been doing a creeping acquisition, you've been doing you just did a rights issue, a warrant as well. So what is the total equity that the management has brought in?
What actually, if you recall, at the end of the rights issue, we were at around 67.7%. The GMR Holdings, the flagship vehicle of the promoters, was holding 67.7%. And during the last post-rights issue, we have increased to now 69.6%. Okay. That is the additional acquisition, whatever we have done from the market. And the amount-wise, it may not be very significant because of the share price has fallen subsequently. But it only shows the confidence of the promoters in the operations of the group and the future direction of the company that it is heading to.
Okay. Your two subsidiaries got gas for its power plants. Can you tell us how much that might add to revenue and whether those plants themselves become at least break even?
Let me tell you, first of all, in the direction of what the government has been undertaking for the last few months, if there is one particular development that is going to significantly change the scenario in the power sector, is this stranded power assets, gas assets, whatever the policy they have introduced. I can tell you now, recently we have won two contracts, in Vemgiri Powers as well as GMR Rajmandri. We will be entitled to get 50% of the PLF. If I have to translate for your information and the viewers, this translates to close to around 1,500 crore of revenue and an EBITDA in excess of 200 crores of rupees. And this is, I am talking about only the next 6 months, that is from October 1st to end of March. So during the next 6 months, if we start operationalizing both our power assets and we start using the 50% PLF that is we are entitled to, there will be a significant addition of revenues and EBITDA. So it will not only take care of all the operational expenses and all, the need of putting in fresh equity into the company itself will be completely mitigated, and there will be a renewed confidence with the lenders as well, since the revenues will start operating, because these assets were stranded for the last 3 years or so. In addition to that, in our GMR Energy, we have already signed an MOU with Cairns Energy for getting another 100 MSCD of gas in our GMR Energy Limited. So that also is likely to add to our revenues. So I am talking of one is the policy of the government, another is what GMR Energy has done. Okay. So with this, our entire gas portfolio will be coming alive, and we should be registering significant jump in our EBITDA numbers.
Okay, that's interesting. You know, but the other division that had helped you reduce your losses in the quarter gone by was the airport division. So over there you had good traffic growth of 13% in the Delhi airport and 23% in the Hyderabad airport. Can you give us a sense of how much the airport division will grow in the next couple of quarters and how much will it contribute to your EBITDA?
Let me give some figures. Dial, for example, in the last year, for the whole year, it did a turnover of around 4,195 crores. As against 3,923 crores previous year. But this year, the traffic and the non-aero revenue is significantly moving up, as you rightly said, more than 14%. Apart from another very important area where the significant movement is seen is in the cargo revenues. So this is going to add up to our top line as well as the bottom line very substantially. And most important thing in our Hyderabad airport, after about 1 year of a struggle, we have got a very favorable order from the regulator as well as the government of India, whereby the single till has been reviewed, has been cancelled, and 30% of the non-aero revenue, which we were all fighting for a hybrid till, that has been finalized completely without any question of doubt. This alone is going to add in excess of around 330 crores in the current year. So you can see that kind of change. Not only the traffic is improving both as well as Hyderabad as well as the Delhi airport, but a very important finality. There is no now ambiguity. There is no other kind of an appeal or anything. So a finality has been posted as well as the Hyderabad airport, where more than 330 crores of EBITDA is now going to be added to our bottom line. Apart from that, now we are be initiating a major exercise on the real estate in the Delhi airport in this year alone. I do not want to spell out more details, but I can say that the real estate monetization is one of the major things that the investors as well as the analysts are very keenly looking for, and you will be seeing a major movement in this direction.
Okay, we have to.
All in all, so the airport sector is going to be registering very significant milestone on 3 factors. Number is traffic improvement and cargo improvement. Number 2, the monetization of real estate. Number 3, the resolution of the tariff in Hyderabad airport. Hopefully, if the regulator resolves our Delhi airport tariffs also, I think it will be a feather in the cap.
Yeah, Mr. Terdal, we have to cut to the finance minister very shortly. So a very quick last question to you. In the first quarter, your EBIT was 400 crore and your interest outgo was 900 crore. When does this gap reduce? In the second quarter itself, in the second half, what might the last quarter difference be?
I think I will have to wait to reply to that. But what is important is, as I told you, now the Kamalanga, for example, just in 1 year, the kind of quarterly improvement, if you can see, I'll just quickly give the numbers. You will see the kind of changes that are happening now. For example, before that, another one important thing before you disconnect is that we have reduced more than 1,500 crore of debt, and it has helped us to save more than 80 crores of interest per annum. And in the coming year, it will be much more than that. As far as coming back to your YEMCO, for example, as against our revenue of 1,200 crores, we have already done this year. And EBIT of 8 crores as against 34 crores last year. You can see our number in MCO was 34 crore last year. This year is to 248 crores. In Kamalanga, it was negative 40 crores last year, and this year it is positive 75 crores. So you can see the kind of change and also the quantum of that change that is likely to happen.
All right, point taken, Mr. Terdal. Thank you very much for joining us with that wealth of details.